As usual, there have been ups and downs in the stock market, but the electric car sector has seen especially tumultuous times. Experts continue to release updated forecasts. Investors continue to shift their positions regarding which businesses will prosper when the storm has passed and the future takes shape and new events continue to transpire in the world. Given how much a fund's performance depends on the businesses it bets on, what happens if one of the largest funds swaps a sizable share of one fund for another. It's a strong indication of the fund's position and conviction on these businesses. Yes, recently one of the biggest funds sold its GM shares and purchased Tesla. What does this mean in practical terms? Why did this happen? All of this will be revealed in today's video. Among the competitors vying for supremacy in the electric vehicle sector are Tesla and General Motors. Both parties are aware that the other won't give up even a single inch in the struggle for customers' wallets. Investors are arbitrating the conflict in the meanwhile, choosing which of the two automotive titans to back based on their respective development goals and market positions. In this instance, Tesla is ahead of the game with a market valuation of over 837 billions, which is 12 times greater than GM's market value of $68.09 billion. The Canada Pension Plan Investment Board, a Canadian pension fund established in 1997 by the Canada Pension Plan Investment Board Act, has awarded Tesla a new trust mark. The Royal Corporation in charge of managing and investing the money donated to and retained by the Canada Pension Plan is the Canada Pension Plan Investment Board, also referred to as CPP Investments. According to a Securities and Exchange Commission filing, the largest public pension fund in Canada reduced its holdings in General Motors and increased its ownership in Tesla in the fourth quarter of 2021. As of December 31st, the Canada Pension Plan Investment Board held 483,016 Tesla shares, up from 368,706 on October 31st. A recent estimate placed the stake's overall value at $418.03 million. However, as per the Securities and Exchange Commission's announcement, the Canada Pension Plan Investment Board sold 4.23 million GM shares concurrently and kept 548,346 shares as of December 31st. This position is worth a total of about $25.06 million. Few further sizable blocks of shares were also sold by the pension plan. The Canada Pension Plan Investment Board also sold 1.4 million shares of NVIDIA and 173,237 shares of General Electric. In addition to these car sales, it appears that they are strengthening the fund and reevaluating the businesses that are part of it. Considering that General Motors is in the midst of a significant electrification push, the choice to sell off shares is really intriguing. But based on their brand values and previous actions, it seems the Canada Pension Plan Investment Board decided to switched to Tesla because they were tired of waiting for a return. According to AISA, on February 28, 2022, gas costs have increased to a national average of $3.61, which has caused the stock prices of Tesla and other electric vehicle manufacturers to soar. Tesla saw a 7.9 increase and finished the day at $885.67. Tesla shares saw a minor decline after market close, shedding roughly 7 for the day as some investors cashed in on their profits, while NIO rose by 10 and Rivet gained by roughly 7.2. General Motors intends to rule the electric vehicle market. It is obvious that this event would take longer than anticipated. Meanwhile, since nearly the beginning of its existence as a publicly traded company in 2012, Tesla has led the electric vehicle industry. The company's energetic CEO, Elon Musk, is regarded alongside Henry Ford and John DeLorean as one of the most well-known entrepreneurs of all time. We interpret the Canada Pension Plan Investment Board's action as a wager on Tesla. Many analysts, nevertheless, remain pessimistic about Tesla. Notably, one expert said it is highly unlikely that substantial price appreciation would occur in the future, even though it is both conceivable and likely to do so. Expectations should therefore be reduced, as it was implied that Tesla had peaked and that its previous performance was the peak. However, some specialists would strongly disagree. In July 2020, Day was Nathan upgraded Tesla to outperform after it had been at neutral. Nathan thinks that the company's advantage over competitors that make internal combustion engines is reinforced by new concerns about the supply chain and combined with rising oil prices. This is significant because despite General Motors' best efforts to transition to electric vehicles, internal combustion engine vehicles still account for the majority of their profits. Nathan stated in a client note that Tesla could be more competitive in the current Russia-Ukraine conflict due to its ability to ship from China, which is a cost-effective location, and its history of handling chip shortages better in 2021. However, rising oil prices and the potential for fuel shortages, especially in Europe, could speed up the switch to electric cars. As a result of Russia's invasion of Ukraine, investors seem to be placing bets that the US and European governments will move quickly to accelerate EV incentives and adoption in an effort to reduce dependency on foreign oil. On February 28th, the eve of President Joe Biden's State of the Union address, the White House released a statement outlining his investments and initiatives in the clean energy sector. Furthermore, we think that the actions taken by the Canada Pension Plan Investment Board are consistent with their commitment to achieve net zero by 2050. The fund recently said that it will be striving to achieve zero emissions by 2050, in line with global criteria set forth by the Paris Climate Agreement. The fund manages $550 billion assets on behalf of Canadians. While not the first Canadian pension fund to pursue net zero, this one is the largest and the only one whose investment activities have an impact on the entire nation. The Ontario Teachers Pension Plan, Investment Management Corp of Ontario, Conseil Dépôt E-Placement du Québec, and the Ontario Municipal Employees Retirement System have previously pledged net zero. Naturally, the United States was not left out of this commitment. The Biden administration likewise established formal targets to reach net zero greenhouse gas emissions by 2050 and a 50 sales share of electric vehicles by 2030. The first 2 months of 2022 with the objective of achieving a more than 50 reduction in greenhouse gas pollution by 2030. Companies constantly strive to keep up with the times in an effort to remain relevant. Naturally, General Motors also released a statement announcing its intention to gradually replace gasoline-powered cars and trucks with zero-emission electric vehicles by 2035. The CEO of General Motors, Mary Barra, recently said in an interview that we believe in climate change. It's true. We therefore understand that transportation has a big influence. Barra anticipates public demand for electric cars, such as a 350-mile range Hummer that can run on a single charge. She continued, we're seeing it grow. And I believe that we're approaching a tipping point where consumers are much more likely to embrace an all-electric vehicle because they recognize the benefits. Although this is excellent news for the environment, the car company still has a ways to go before releasing an electric vehicle. Regarding General Motors, the decision made by the Canadian fund between the two manufacturers exude disapproval. This is especially true considering that the Detroit car maker, under the direction of CEO Mary Barra, is making a greater effort to catch up to Tesla. In the meantime, continuous crude oil characteristics dropped by $0.91.90 on Friday following recent intraday trading above $100 per barrel for the first time since July 2014. Nathan of Daiwa stated that the corresponding decline in profit contribution from internal combustion engine vehicles may hold down investments into electric vehicle expansion, which is what Tesla's competitors are aiming for with capacity increases in China. This is because uncertainty about new car supplies and fuel prices impact demand. In his opinion, Tesla is well positioned to satisfy the current climate's increased demand for electric vehicles. The Canada Pension Plan Investment Board was not the only fund to purchase Tesla shares in light of recent developments. Vanguard and BlackRock Incorporated have also increased their Tesla stakes according to their regular quarterly statements submitted to the Securities and Exchange Commission. On October 31st, Vanguard increased its holdings of Tesla from 61.9 million to 62.4 million. BlackRock owned 52.8 million Tesla shares as of December 31st, or 1.42 of the company's total capital. Kathy Wood of Ark Invest, a longtime supporter of Tesla, has just purchased Tesla stock. She added that she doesn't support the current trend of traditional automakers such as General Motors and Ford. When General Motors unveiled an electric variant of Silverado, its best-selling pickup truck, the company's stock price increased. Wood remarked, "Think about it. They surge on those electric vehicle announcements," pointing out that sales of traditional automakers' vehicles are dominated by gas-powered vehicles, with electric vehicle sales making up just 2% of total sales. Okay, Reared. According to Wood, companies such as Ford or General Motors may see an unexpected loss this year as a result of increased investment in electric vehicles and a decline in the market for gas-powered vehicles. He also thinks that electric forward automakers like Tesla are better investments than traditional automakers. In light of that, it makes sense for the Canada Pension Plan Investment Board to go from what might have been losing wager to what they perceive to be a more lucrative one. Fund said, our investment only mandate assures that we focus entirely on optimizing returns while limiting undue risk in order to help build a retirement foundation for 20 million Canadians. Why, in your opinion, did the Canada Pension Plan Investment Board sell its General Motors stock and purchase more Tesla shares? Please leave a comment below.